This is to try and explain how control accounts work. So we're only looking at debtors here. So these are people who owe us money. So what we start off with is our day books. So the sales day book and the sales returns day book, they affect how much we're owed by people. Okay. So I have some sample transactions here. So these are the people who we've sold goods to on credit. There's the amount plus the VAT and the total. And there was two people who returned goods, and there's the total. So let's just see what happened next. So we're going to separate what happens to the money, the total that they owe, from the other transactions, or the other entries as a result of these transactions. So what we would have done as normal, the total of the sales account, okay, of the sales column here goes into the sales account, and it's an income, so therefore it goes in on the credit side. So I have 1050 on the credit side in the sales account, or sorry, 10,500. I then balance my sales account because there's only one entry in the sales account, and I end up with a balance BD of 10,500. Okay. I then go and I do my VAT. So VAT has 10,050 for sales. So this is the extra money that I owe the government that I've collected from VAT. So that's a liability, so that goes in on the credit side. And then the sales returns on the debit side, this is the total of this here. This is the amount of refund I'm going to get. So I owe the tax man a liability, it's on the credit side because it's a liability of 1015. I then, so I have sales returns account, sales account, VAT, and bank here. So we're not told the details of this, but these three people gave me money. So they're the only transactions that went into my bank account that were relevant for debtors. So we were just going to put those together as if they were the only things that happened in my bank account. So the net effect of that is we have 4,200 more in our bank account because of our debtors. So what I'm doing on this side here is I've decided to do a control account which totals up the amount of money that I should be owed by all of my debtors by taking all of the balances of debtors related ledger accounts together and putting them into one single account called a debtors control account to work out how much should my debtors owe me. So the 10,500 that I have here from sales goes in the debit side. Why does it go on the opposite side? Well, debtors are people that owe me money, so they're an asset. So this here means I have more asset owed to me, so it's on the debit side. The VAT, I owe more money to the government. Okay, so this is, I'm going to be charging this money to my debtors, so I'm adding this to my debtors. Sales returns, so this is the money that I didn't earn as an income. I thought I was going to earn as an income, so it's taken away as a minus against the income. So it reduces how much debtors owe, and the bank, this is it reduces how much they owe because they've paid off some of the money. So overall, my debtors owe me 6,695 at the end. Now, what I do separately is I want to see, as a double check, is this number right? And I do this by checking to see, does it agree with the total of what all of my debtors accounts say? So Mr. Orr Brown here, well, 600 after the sales in the bank, this person owes 600. This person knows there's a number of transactions there. When I balance this account, 2695, 1470 for S. Timmons and D. Doyle and A. Burns, there's the amount they owe. I list them there and I have a total figure. So the balance BD for each of these, I take all of those balance BDs, add them together, and I get the total from the list of debtors' balances. And if I've done my entries correctly, this list should be the same. The total from this list should be the same as the total that I get over here from doing my debtors control account.